Good morning, sir. My name is Daniel Ong. Today, I would like to present lecture 4, which is payment issue. I will explain the three types of sum, which is contract sum, price cost sum, and provisional sum. Firstly, contract sum is the price agreed by the employer and the contractor in the contract. The agreed contract should be calculated and checked very carefully because all the errors are deemed to be accepted by both parties. Adjustment on contract sum should be made and must taken into account in the valuation of subsequent interim certificate. Next, price prime cost sum is sum provided in the contract for works or service to be executed by the nominated subcontractor or for materials and goods to be supplied by nominated suppliers. If the nominated subcontractor or nominated supplier's actual cost is higher than the bulk of quantities allowance, then the contract sum will be increased vice versa. So normally employer will select or nominated their supplier or contractor to avoid increase up for prime cost sum. For provisional sum, next Jason. The sum provided in the contract for work to be executed or for the supplier of any materials and goods which cannot be foreseen, determined, or detailed at the time. A provisional sum can be categorized as defined or undefined. Defined provisional sum are those which have been described in sufficient detail that the contractor is expected to have made allowance for them in their programming, planning, and pricing preliminaries. The work may not have been completely designed, but the following information may be known as the nature and construction of the work, how the works may impact on the existing building or surrounding, the quantities that indicate the scope and extent of the work, any specific limitations. An example might be where a defined amount of brickwork is required, but the abstract design has not been finalized and so the price cannot be accurately determined, or the cost of installing a timber frame where the specific type of timber has not been yet been specified and so its price is not known. Thank you, sir.
Hi sir, my name is Chong. I will be presenting the valuation in building contract. Next. The valuation in building contract is an assessment carried out by consultant at regular intervals. It is a process to let QS provide value based on the work done to determine the amount of works properly executed by the contractor in order to let employer to make payments to the contractor under the provisions of the contract. Thanks. So the contractor must follow the standard procedure in order to let them claims the money. Firstly, the contractor must submit claims to the consultant. Then the consultant will be doing the site inspection to verify the work done by contractor. Thirdly, the QS will be preparing a valuation reports. Then the architect will be issuing a certificate of payment based on QS valuation report. Lastly, the employer will be honors the certificate of payment to the contractor to claim money. Next. Interim certificate is one of the certificate of payment. It is issued by architect at regular intervals based on periodic estimates of the value of works. Interim valuation is a precursor to issue of an interim certificate which allows an interim payment to be made. The role of QS in interim certificate will be in charge in measuring and valuation of the works. The architect will base on the valuation reports prepared by QS to support the interim certificate. The period of interim certificate is normally given by 1 month and 21 days for the contractor to clean up the interim payment. Next. There are seven elements in interim certificates. Firstly, will be preliminaries, for example, like workers, site office, prepared by contractor before the construction project is started. Secondly, the measurement works carried out by QS. Thirdly, the valuation of architect instruction or variation should be followed by all the contractors. Fourth, the remeasurement of provision item, prime cost sum, and provisional quantities. Five, the valuation of nominated subcontractors and supplies. Six, the unfixed material on site and where allowable materials off site. Last but not least, the fluctuation where they are allowed within the contract provisions. Thank you, sir.
Good morning, sir. My name is Chong for the retention fund. Next. The purpose of retention fund is to provide the security to employer with a form of source of funds to prevent the contractor cannot complete work when work are taken over. With this retention, contractors are responsible to complete the project with the design and quality that specified in contract. The limit of retention fund usually specified in contract. If not specified, the amount that employer entitled retain is only the percentage of the contract sum. Typically, the amount of the retention fund is 5% of the contract sum. Retention fund released by separated to two stages. First modality is 2.5% release upon end of contract period when issue CPC. Second modality is 2.5% release upon end of DLP when issue CMGD. Next. For the penultimate certificate and final certificate. Penultimate certificate is issued when the second modality of retention fund is released. Final certificate is served as a evidence that works are complete and contractor has fulfilled its responsibility and identified the money finally due and payable between the parties. Final certificate issued at the end of DRP and it met the final financial statement of the party right. Next. For the final account is conclusion of the contract sum that include the all of the requirement adjustment. The amount that the employer paid to the contractor agreed by both parties. After receive the copy of the final account within 3 months. If no dispute will be deemed by agreed by both parties. If dispute, the disputing party need to state the disagreement and write a notice to other party. Final account will be prepared and correct by the architect or QS within 3 months. Next. The complete final account should include variation work, remeasurement of provisional quantity, omission of PC and provisional sum, adding back of nominator, subcontractor and supplier final account, adjustment of profit and attendance, adjustment of provisional sum based on actual expended and omitted if not expended, additional expenses, claims and the loss and explain claim. Next. The final account should not include liquidated damages, VAT, and the interest on overdue payments. Thank you.
Hi sir, my name is Weiqin and I will present variation. A variation sometimes refer to a variation instruction, variation order or change order. It's an alternative explanation to the scope of work in a construction contract in the form of an addition, substitution or omission from the original scope of work. Almost all construction projects vary from the original design, scope and definition. Whether small or large construction project will have inevitably depart from the original tender design, specification and drawing prepared by design team. Next. Variation may include alternation to the design, alternation to the quantity, alternation to quality, alternation to working conditions, and alternation to the sequence of work. Variation may also de- deem to occur if the contract document do not properly describe the work actually required. Variation may not without the contractor consent, change the fundamental nature of the work, or make work so that it can carry out by another contractor, be instructed after practical completion, and require the contractor to carry out that the subject of a prime consum. A variation order is issued whenever there is a variation to the contractor work. This may include editing omitted work, increasing or decreasing the quantity of any work, changing the character or quality of any material of work, the work in which the work deposit. How and who value variation order should be included in the contract document. Not all variation order require a variation in the contract cost. Example, substitution of similar material or a change in color of material. Variation can be requested by either the contractor or principal or come about as a result of condition outside the contractor either party. Example like bad weather. In construction project, most diffuser variation order are extension of time, particular where concurrent delay are concerned as these often have significant cost attached. That's all. Thank you.
So, good morning, sir. My name is Dr. Nin. So, I'm going to talk about the loss and expense. So, for the loss and expense, most of the construction contract will usually provide for the contractor to claim direct loss and expense as a result of the progress of the work being materially affected by the relevant matter for which the employer is responsible. So, beside that, claim for loss and expense run side by side with relevance events. In EOT, except for natural event and contractor's default. So, and for the claim may comprise costs resulting from disruptions to the works or from delay to the works. Next, so loss and expenses are caused by matter affecting the regular works progress. And so the loss and expenses claim arise due to a few issue, which is delays and EOT, changes to the nature of the project, disruptions caused by the employer or its agent, and last is variation to the contract. The delays and EOT is late receive of the contract drawing and contract bill by the contractor. After that, a delay by the employer in giving position of site, and then delay by the employer's artistic in executing works, and delay or failure in supply of materials and goods where the employer agreed to supply for the works, and delay due to discovery of antiquities, and the late instruction from architect AI, including the expenditure of PC sum, provisional sum, drawing, detail, level, and other information. And lastly, delay due to the late appointment of a replacement of architect, engineer, quantity surveyor, or specialist consultant. So the second issue is disruption caused by the employer. Any act of prevention or breach of contract caused by employer will provide the contractor to claim for loss and expense. So failure of employer to give due time, entry or exit from the site, suspension by the contractor for non-payment by the employer, and beside that, third one is variation to the contract and changes to the nature of the project, suspension by the order of appropriate authority, any act of prevention or breach of contract by the employer, execution works for provisional quantities are not accurate forecasts, often changes to quantity, quality, or method to be adopted, and last but not least, compliance of written instruction by architect due to postponement or suspension of any part of the works. And after that, this is the picture that talking about the time, cost, and quality of the the risk and the autonomy of major project. That's all. Thank you.